Hey, what's up, YouTubers? I just want to make a short video on how to deal with a drawdown from your favorite signal provider and how to not lose your capital, or how to decrease the drawdown. I've tried quite a few service providers for signals. Plus, I have my own systems, but all the services I've ever used, eventually you're going to encounter a drawdown. And that's already happened with some of the service providers I use. I just want to give you a few ideas on how to deal with the drawdown so you don't draw down your account too much, or how you can increase your win rate even with a little bit of strikes that expire out of the money. First off, I want to say if the drawdown's really bad and then the service provider's way off, then you're just going to have to demo the signals until you get back into a higher win rate, let's say 62% or higher. Another thing you can do is, I've noticed with some service providers, you lose by 1 pip, 2 pips, or a fraction of a pip. So you can use the same time frame you're using before, but like say you're going long or you're buying, you'd buy 2 pips or more in the money. So if the strike was 112.90 and it was a buy, you'd go 112.90, 112.88, and if you were selling, you do the reverse. So if it was 112.90, and again the service provider is losing by a fraction of a pip or 2 pips or less, you would buy 2 or 3 pips in the money. So it'd be 112.90 would be like 112.92, 93, 94, depending on what the average is. So if you notice you're losing it by a fraction of a pip or a pip, just by 2 pips of the money or 3 pips of the money. Now with Nadex and Cantor exchange, you can't always do that. You can do the best you can, and you can put in an order that may not get filled for the price you're looking at. So you have to keep that in mind. So if you don't get filled, at least you're not losing your money on the strikes that you'd normally lose like that. And sometimes the reason that service providers has a lot of out of the money stuff is because the markets are very volatile and their strategy is not dealing with the volatility. So what you can do to increase your win rate on stuff like that, when they're losing at the last minute or the last few seconds just by a fraction of a pip or 2, you can buy them 2 or 3 pips of money. In fact, sometimes you might want to buy them 5 or 6 pips of money, because you can have that opportunity, because like say something expires at 11 a.m. and then you have the 9 to 11 strikes on Nadex. So you can go to the 2 hours and the daily 11 a.m. close on Nadex and figure out which strike is going to be the cheapest and which is going to be the best to get you filled at whatever your service provider's suggested strike it is at. Another thing you can do with different service providers is you can notice, I've noticed, like they'll lose 2 or 3 in a row, and that if that's the case, then they win a few. What you can do is wait until there's 2 losses in a row and then start entering the market. That's another thing I like to do too. I'll enter the market after 1 or 2 losses and then jump in. A third thing you can do, I've noticed with some service providers, I don't know why, but like right at the beginning of the day, they win the first order they put out. Now, I'm not saying this is the best idea, but like if they win the first, the first suggestion they put out, just, trade that, you're in the money, you're ahead for the day, just stop. But the only thing you can do then is maybe, trade or contract on that one strike, but I don't know if I would really do that. And that's a few ideas on how to deal with the drawdown if the service provider's strike levels are losing by a fraction of a pip or a few pips. Just buy 2 or 3 or 4 pips of the money. Now I realize you can't always get filled, but if you are patient, and if the reason the service provider's strikes aren't working out is because of volatility, that's one thing I like to do. It doesn't always work, but it works enough that it can take a 25% win rate and bring it up to 50 or 55, which is break even, I realize, but at least you're not losing that much. And if the service provider is just week in, week out, just not getting there, you might be dealing with a 1 month or 2 month drawdown. And the reason for that is it could be that their strategy relies on not a lot of volatility, and so they haven't factored that in. And there's different ways to deal with that. Some strategies work well with volatility, like some of my strategies work really well with volatility, and other ones don't. You have to figure that out yourself, and you have to take action and look at the market, see what they're doing, and determine what you think is the best course of action. If you're really not sure, the best thing is to stop trading, take a few days off, and just demo the trades so they start getting in the money at 62% or more. And just as a suggestion, if you have a 60 to 80% win rate, you have to decide what you're going to pay. I generally won't pay more than $60, usually 50 to 55. So keep that in mind too. Now, when you limit yourself, well, I won't say limit, but when you pay like that, you may not always get filled, but when you do get filled, you tend to win more. But when there's a lot of volatility and you do get filled, sometimes you lose a few that way. But you have to determine if it's the volatility in the markets that's affecting you, and you can tell that typically, at least with some of the service providers, is they're right about the direction, they're just wrong about the timing, and they're wrong by like a fraction of a pip or a pip. That's how you can deal with stuff like that. Another way you can deal with this, it's not an ideal way, but if you're losing quite a few and your service provider trades between 11 and 12 Eastern to like 3 Eastern, you can go on Cantor exchange. Now they only have about 6 instruments you can trade there, but if a lot of their instruments are like, if they're trading US dollar or US dollar yen, euro dollar, and forget what else they have. They have Aussie dollar. If they trade those a lot, there's a 1 or 2 pound, I think pound yen they have on there. If they trade those a lot, there you can just buy one contract for $1, or that's what the payout is. So if you're buying at the money or 50 cents, you're just paying 50 cents, and if you win that option, you get $1 back. So that's one way, is to trade smaller on Cantor if they happen to use the instruments that are available on Cantor. And keep in mind, on Cantor, there's not a lot of instruments, and there's really not a lot of liquidity. So I'm saying, like, if you want to trade like $5 or $10 lots, or $5 or $10 position size, or things of that nature, Cantor is also cool if you like to trade the euro dollar, and they only can go out about 1 hour, 20 minutes to 1 hour, 5-minute binaries, 20 minutes and 1 hour. So you can't go out an hour and a half because that strike won't be available yet. Another thing on Cantor is they have rolling strikes, which is kind of cool. But the spread between the strikes is 5 pips each, so they're rolling at 5 pips each, which kind of makes it easier to buy out of the money by 3 or 4 points compared to Nadex. But it is limited in the volume and the instruments. So just keep that in mind. So if your service provider provides opportunities to get in between 12 Eastern and 3 Eastern, they do have something at 4:15, but there's usually not any volume on there at all, at least in my experience. Now that's all changing constantly, so you want to check in Cantor and see if they've offered more contracts and if they're offering more instruments. When I first started trading there, it's like 5, I think. Now they have 6 or 7 instruments. And so that's another way you can trade smaller if you want. It's not always an option though with the service providers, because a lot of times they'll trade indices too, and they don't trade indices. The only thing they really trade is currencies and gold. So just another opportunity to deal with a drawdown, or if you want to trade smaller contract sizes, check out Cantor Exchange. Anyways, those are just a few ideas on how to deal with a drawdown, and if your service provider's just missing it by a few pips or a fraction of a pip, and that's not uncommon. And typically that's because of the volatility in the markets. And a lot of times the volatility will go up for 2 or 3 months out of the year, then it goes back down for, it could be political events or economic events. That happened with the pound dollar, when they had Brexit, there was like volatility for like 3 months, and strategies that had a break even during those 3 months were breaking even or slightly had a small gain or small loss, went into total profit after that. So you keep that in mind. Volatility can affect your win rates, because a lot of the service providers have strategies that rely on low volatility. So keep that in mind too. Anyways, thanks for watching the video. Like, subscribe, and if you have any suggestions or ideas on this, let me know in the comments. Thank you.